All right, guys, it looks like we are live. Gonna give everyone a little chance to join us. Hope everyone's having a wonderful Friday. Always here every Friday, 11 a.m. Eastern for a Cannabis and Company Buzz session, where we interview some of our members and talk to them about some awesome topics like tax and accounting practices for businesses. Get this shared into some other groups really quick. And by the way, those of you that are joining us, make sure that if you have any questions, please feel free to put them in the comments. If there is a question that you have that is specific to one of our panelists, then what you'll want to do is put their name in there. That way, after the broadcast is over, they can go in and answer your questions if we don't get to it today. So today our topic is tax and accounting practices for cannabis businesses, and I am joined by Harley Sherman. I am joined by Kate, and Harley, you Etsham is your company's name, and you have Harley Sherman CPA, which is what we tagged in our post. And then we have Caleb Grapp and Aaron Larash with Grapp Larash. Thank you guys for joining us. And then we have Carrie Schell with Growing Green CPAs and Business Advisors. Thank you all for taking the time to be with us today. I'm going to start with you, Harley. I'm going to give you the opportunity to introduce yourself, tell us a little bit about your business and even your background.
Well, thank you, Jamie. Always good to be in one of your shindigs. So my name is Harley Sherman, and I am the president of Eitz Chaim, which is Hebrew for a tree of life. And we have been in the accounting industry. I've been a CPA for about 25 years, really focusing on the cannabis industry and the affiliates, if you will, since 2016. And I got into this because, one, I thought it was just a fascinating topic, the whole 280E conundrum. But then I realized like how many people are really being disserviced and by poor accounting. And well, back in the day when I was so much black market and there was no record keeping. So what we do is we help with the application process. We help people set up their books, keep their books straight. We offer IRS representation, and if things go to court, we offer expert testimony as well. So our whole shtick, if you will, is to educate our clients so they can make informed decisions and plan accordingly. So again, great to be here. Thank you.
Great to have you. Thank you so much. Caleb, go ahead and introduce yourself and tell us a little bit about your company and background.
Yeah, thanks, Jamie. And great to be here as well. So I appreciate you inviting us out to be on the show today. So Grapp Larash as a firm, and I'll touch on half of it, and Aaron will probably touch on the other half. Has really, we've been around for about 2 years, give or take. And this was born out of kind of Aaron and my collective experience, many years with leading some of the largest public accounting firms in Michigan. My background is extensively in governmental and compliance auditing. So, working through some of the compliance facets of cannabis business has been kind of a second nature for me. Our firm is a full service firm. So we touch, the breadth of all accounting services from audit all the way through to bookkeeping and payroll. So, really we're kind of there as a kind of the full stop resource for our clients. I've been in the industry for 10 plus years at this point. Kind of to echo Harley's comments, when we looked at the cannabis industry, it was kind of one of the founding principles of where we wanted to be in our business and say, there really is an underserved population out there, a whole host of individuals who don't have good advice, as a lot of firms traditionally are backing away from the industry. And we wanted to step in and really provide, that top level experience to an industry that was really underserved.
Absolutely. Awesome. Thank you so much, Caleb. And then Aaron, go ahead and explain the other half there.
I don't know if there is another half. I don't know. Caleb did a pretty good job explaining kind of what we do and why we're kind of participating and obviously really looking to serve clients in this industry. A little background on me: I kind of started off in public accounting. After that, I had a stint of several different positions in financial reporting and then also taxation within corporations, both small and large. And then, as Caleb mentioned a few years ago, we kind of made the connection and, had a general desire to really, come out and do something maybe a little bit different, approach things in a different way, and really put a focus on client service. And, that's kind of what spawned Grappler Ash. And, the interest level, and again, to echo Harley, is really making sure that, those clients out there in the cannabis industry are getting top level advisory services and have the ability to kind of tap into, individuals like all of us that have, kind of, been there, been part of, learning the industry and wanting to make sure that things are getting done right.
Absolutely. Thank you so much, Aaron. Appreciate that. And then Carrie joining us from Traverse City. Carrie, if you could tell us a little bit about your company.
Yeah, thanks, Jamie. I'm Carrie Schell. I'm the founder of Growing Green CPAs and Business Advisors. We're a division of Manville and Schell. We've been in the accounting and tax business for 30 years, working with small businesses. Our goal is to make a significant difference in the businesses that we work with. To work with them on a monthly basis or a quarterly basis, not just see them at the end of the year. We don't feel that does, gives them the information that they need. So, obviously the information they need in the cannabis business is very similar to other small businesses, except that they have the cannabis specific issues. And so, just like the others on the panel, just want to help the businesses and, make a difference.
Thank you very much, Carrie. And it's definitely helped that a lot of businesses in our industry need, navigating a brand spanking new industry, something that is still considered federally illegal. So I'm going to start with Caleb and Aaron. Really quick, just take a moment to kind of explain to our audience 280E and how it can actually be a pain in the rear end for some of these businesses.
Yeah, that's probably putting it incredibly lightly. So Code Section 280E, I guess, really, really broadly defines that no deduction or credit is allowed for really any sort of ordinary or necessary expenses in operating a business that consists of trafficking in a controlled substance. So there's a whole host of businesses that are, or I guess substances that would fall under trafficking, business trafficking in controlled substance, which is obviously federal law, and hence why, Jamie, you've alluded to the cannabis business being considered federally illegal. A little bit of background on Section 280E, apart from kind of what everybody already knows, which is limited deductibility of most expenses from a business perspective, is that it really was born out of, and this goes back to a case that was started to be tried in the Carter era and then finished in the Reagan era. But it was really Congress's response at that time to kind of an inappropriate use of tax law in a case where, and the case is Edmondson v. Commissioner. The IRS and the tax courts allowed deduction of all necessary expenses for Edmondson, the party in question here, who his primary business was trafficking in controlled substances. It wasn't just marijuana, it was amphetamines, it was cocaine, it was, a whole host of things. And at the end of the day, and this was in 1981, I believe, the courts ruled that the deductions for what we typically don't see deductible today, like telephone and rent and utilities and those types of things from a reseller perspective, were all deductible. And I think at the time, it was kind of a Congress's approach to say, well, that's not going to fly. We can't have illegal activity getting full treatment under the tax law. So really, I think this section was enacted to as a response to that court case and to really shore up what has been the position over now the last 40 years, saying absolutely not, no deductions. We're not going to incent these types of businesses to be able to use the tax code effectively like any other legal business per se would be allowed to use.
Okay, that's a great explanation, and definitely it's there's something, and I'll be asking questions to all of you guys a little bit later about what can be done to help change that on a federal level. So does 280E impact all cannabis businesses in the same way? Is it only plant touching businesses?
So that's a great question. So yes and no. So 280E, again, as Caleb mentioned, is really a prohibition of, all those non-cost of goods sold, any deductions that wouldn't be to gross income are being effectively prohibited. So, as you begin to look at the various different types of businesses, you have to further go down to what defines cost of goods sold. And it's different. That definition is different for the different types of cannabis businesses. Is really looked at through two lenses, and that's as a reseller and then as a producer. So resellers, I guess, definitely get the short end in that, there's a much smaller pool of costs available for them to deduct from a cost of goods sold perspective. It's really limited to, what's the purchase price or the acquisition cost of their inventory, plus maybe some freight and some other ancillary type costs related to that. But by and large, all of their, normal business expenses, rent, labor, all those things that most businesses enjoy as deductions are not allowable and prohibited. On the other side, where you're thinking of processors and cultivators, the definition is a little broader. So it does allow for some specific types of indirect costs, as we call them, to be inventoried or capitalized to your inventory. And then when you sell that inventory, it gets deducted as a cost of goods sold. So there are some additional costs that get brought into the mix. And so cultivators, processors are still very much impacted by 280E, but to a much lesser extent than you would see resellers. And to your point on, is it just plant touching? Well, there's a court case that occurred, I want to say in 2018 or 2019, and it was the Alternative Healthcare Advocates, I believe, and it kind of showed that the tax courts and the IRS are willing to extend their reach a little bit beyond the specific plant touching entities, and so. A lot of structuring, a lot of, planning goes into, a lot of the entities and businesses that we see. And, you have to be very careful, I think, in lieu of that court case to say that, it's not just plant touching entities per se that may be within the scope of 280E.
So what will these businesses look like if 280E issue goes away and there's relief from that? What does that world look like for us?
Yeah, I mean, it's going to be a breath of fresh air for sure, I think, for everybody. I mean, being able to operate on the same, kind of playing field as any other type of business, as any other type of retailer, especially the provisioning centers, I think are going to be absolutely over the moon if something like that were to occur, and when it does occur, because it's going to put them in a completely different competitive space. The ability to generate cash and cash flow without that kind of income tax liability hanging out over your heads that really is, kind of, such a large piece of what you're looking at from a cash perspective and cash outlay. I think, it'll be a true energizer for the industry.
Absolutely. Are there any recent tax court cases or developments in the cannabis business world that business owners should know about?
Yeah, absolutely. There's really no slowdown in the recent tax court developments. We continue to see basically any type of cannabis rulings taken to the court system, the judicial system, pretty regularly. So, recently we've seen a May of 2020 ruling, even probably a little bit precedent to that ruling, a Ninth Circuit Court appeal in the ever popular Harborside case, where Harborside's arguing that Section 280E is a violation of the 16th Amendment and consequently, unconstitutional. I don't know if that's necessarily going to fly. We've seen previous to the Harborside appeal, we saw a Northern California Small Business Assistance v. Commissioner court case where they were arguing again that Section 280E was unconstitutional within a scope of a different amendment, the Eighth Amendment, which that basically was completely thrown out. I will talk, I guess, briefly about the case that everybody knows about, which is Harborside, formerly Patients Mutual Assistance Collective Corporation v. Commissioner. And so just to kind of give a recap of that, Harborside is for what we would consider to be a provisioning center. And they went through the process of trying to argue that they were also a producer. And so they wanted to take some deductions for those ordinary expenses that we're talking about under the code section are generally not deductible for a reseller. So they argued that they were a producer. They were capitalizing costs into cost of goods sold. And I guess the facts and circumstances of that case is when the court looked at it, they had come to the determination that absolutely not, you're not a producer, you're a reseller. And as a result, you don't get all of these deductions. That's a pretty common theme in most of the court cases that we're seeing. So recently we had Richmond Patients Group, again, versus Commissioner, which Commissioner is always the Internal Revenue Service in this case. So same scenario, Richmond taking those costs of goods sold and allocating indirect costs and what have you to it, ordinary business expenses, and again, arguing that they're a producer. Again, facts and circumstances come down and the tax court says, no, you're not a producer, you're a reseller. So you don't get to have those luxuries of some of those additional costs capitalized into your inventory. Richmond had argued that, for all intents and purposes, and this probably goes to lend a hand to a lot of the cannabis members that will be watching this. Richmond was saying that, we get our product in, we repackage it. Sometimes we have to dry it. Sometimes we're trimming it. We're putting labels on it and moving it into more attractive packaging. And that's what constitutes us as a producer. And the courts looked at that and said, you're not materially changing or enhancing any of the product. So packaging, labeling, drying it, trimming it, none of that is substantially changing the underlying, product. So those are all activities that are considered in a reseller environment. So once again, as has been the normal, the court ruled in favor of the IRS and found all of Richmond's arguments on the producing side to be moot, no merit to those, and has essentially thrown that out. So we continue to see, as the provisioning centers, dispensaries, as they're called in other states, are moving into those court cases, I think we're going to see a lot of the same result. We haven't seen anything, where the service has tried a cultivator or a producer. So I think there's still some uncertainty out there as to how those entities will be treated. But functionally, I think, best thing for everybody to do is to continue to watch those cases closely, and always, we suggest all of our clients reach out to us, and if they have a question about, facts and circumstances of a case or how it applies in their scenario, we're always happy to discuss. It's, reading through these court cases is not always the easiest thing, and it's certainly something that I'm sure all of us can help with.
Absolutely. Is there a place that people can go and kind of keep up to date on cases like that are happening?
Yeah, so it's not as, I guess it's not as mainstream as you would hope it would be. Honestly, some of the best places to get results are some of the normal day-to-day operations, right? Go to Google and see if something else has changed. All of the tax court memorandums are published, so you can find those in any legal, library research or anything like that. But again, those aren't really commonplace to everybody out there. So you've got to have some subscriptions to some of those legal services to continually get updates. Honestly, probably the best place to go get some of that information is your advisor, right? So reach out to us, reach out to Harley or Carrie, whatever it may be, and ask, hey, what have I, what have you seen, or what do you think about this case? In some cases, that we may be up on it. In some cases, it might be a memorandum that came out the day before and we haven't had a chance to get to it, but we can get in. We have the resource materials to look at those things, to take some time to understand it, and then come back with some questions or some feedback. But other than that, I would, traditional methods of searching, keeping abreast of news is always probably the first suggested approach.
Okay, thank you. And so 280E, does it apply to states like Michigan? Like, meaning does Michigan follow 280E, or is it just a federal thing?
Yeah, so unfortunately, I think the answer is yes and no. So, in, I think it was November of 19, the Department of Treasury issued Revenue Administrative Bulletin 2019-17. So RAB 2019-17, really to address the tax implications of the Michigan Regulation and Taxation of Marijuana Act, MRTA, right, as we kind of commonly all refer to it. It also does point out that RAB does not cover the sales under the MMFLA. So you create a bit of a disparity there they've kind of established. And so what does that RAB say? Well, the RAB goes on to say that basically under MRTMA, for any recreational sales, the state of Michigan has chosen to what's called decouple from the federal 280E rules, meaning that all those ordinary and necessary business expenses are considered deductible for recreational activity. Now that's only after they become licensed effectively. So anything incurred or paid after the date at which point they're licensed under LARA, those companies, those establishments can look to take deductions that would otherwise be prohibited under 280E at the federal level. On the other side, you have medical licensees or caregivers, and they do not fall under obviously MRTMA, and by definition within that RAB, their activity would still be subject to the 280E rules, and Treasury would expect that those deductions would still be prohibited at the Michigan level. And so you have this kind of head scratching disparity, I think, a little bit in how these different activities are being treated at the state level. That being said, if you have someone that's a dual license holder, it's really important, obviously on the sales side, you have to understand due to excise tax and some of those other things, what is, medical versus rec. But you also really need to understand, the other piece of that equation, which is your cost structure, what is directly related to, recreational type activities versus medical. And, anything that would be kind of a combination type expense and would be, something that would be part of a normal business expense, you're going to have to go through the process of allocating those in some reasonable manner between those two activities, at least at the state level, to make sure that you get to the right result under the existing rules.
Right. Yes. Great answer. Thank you guys so much. Harley, I wanted to talk to you a little bit more about the caregiver side of things, and maybe give us some things that caregivers specifically should need to know, about, when they're doing their taxes, and what is some important information that they need to know. I mean, they need to be telling the government that they are growing, and they're using that.
Right. So, so for the caregiver, I guess I equate the caregiver setup much like the new micro business under the MRTMA law, where you're growing, you might be processing, and then you're selling right to. So in that sense, I think we can safely say that you enjoyed the much broader cost of goods sold. So that's one benefit. What happens with the caregiver, though, is that under the MRTMA, caregivers do not pay sales tax or collect and remit sales tax. What MRTMA says is that it's up to, and actually I think this was probably the RAB before, back in 2018, that said the caregivers don't collect sales tax. It's the patient that has to remit the use tax to the state of Michigan. So use tax is at 6% for the state of Michigan, and basically it's a sales tax, but it's a use tax by the user, hence the word use. And so, historically, the caregivers that I've worked with, and I'm sure many of my colleagues, there's really no tracking of sales to the patient. There's really no tracking of really anything. And the state, in their wisdom, has really never audited this. And so now it's all coming to a head. And we could certainly see the state pulling a caregiver's card saying, okay, who are your patients? Going to those patients saying, or, going to the caregiver saying, who are your patients? Or we know who they are. Go to the patient and say, show us your purchases and where's your use tax remittance. And, so the patients can say, why should I do this? I could just go to a provisioning center and not have to worry about all this garbage. I'm paying the tax either way, but why do I have to track it myself? Let the provisioning center do that. So, in my mind, it's just another way of pushing the caregiver system out, because the patients, they're sick. It's like one more headache that they have to deal with that they shouldn't really have to deal with. So, as another aside, just for the caregivers, two things that I've noticed that come up a lot. Caregivers are like, well, I never report my caregiving on my tax return because you're not supposed to make a profit. But the IRS doesn't care what Michigan says about making a profit. And that was more the spirit of the law. It wasn't that you're supposed to be a non-for-profit 501c3. It was that you weren't supposed to gouge the patient. So the IRS fully still expects, whether you have profit or loss or whatever, that you're going to report this caregiving activity on your tax return, and most have not. So you still need to report that whether you think you're making money or not. The other thing, and I don't know if anybody else has seen this from their clients, but we've been getting a lot of calls that the utility companies have been sending out the Form 8300, which is the reporting transactions of in greater than $10,000 in cash. And so they get these statements that if they don't comply with filling it out, fines and penalties. If they do, and they're showing these thousands and thousands of dollars of utility bills, the IRS on the other side is going to catch it and say, well, what house do you live in that you're spending $3,000 a month in utilities? So again, it's this double-edged sword that's really damning the caregiver model.
Right. And something that patients need to be aware of for sure when they have a caregiver. Audits. Are you seeing audits happening yet within the state of Michigan? And what is the likelihood of an audit happening, especially to a plant touching company?
So the state of Michigan now, for licensees, they do have a year-end audit process. Actually, it's not an audit in the what we probably consider to be an audit where full financial, but it's more of what they call agreed upon procedures. The state requires that each licensee have their financials and other documents subject to these procedures about testing income, tracing your POS system, the metric, and what's on your financial statements and your record keeping. So that's definitely happening on the state side. Federal, it would just be a matter of when and if the IRS wants to come in and audit. You know, to me, there's always two sides of the Fed. There was the IRS side, and there's the Jeff Sessions. I know he's not in office in business anymore, but it's still the Jeff Sessions point of view about, you know, we're closing this down because it's federally illegal. And, you know, just like everybody else has iterated, it's, if you're going to be wrong, you know, hey, that's one thing, but be wrong and make sure you have the documentation to show why you are wrong. Don't be wrong without the documentation, because then you're just wrong, which is just really wrong. So you want to make sure that you have the documentation. And I think it was either Caleb or Aaron that spoke about the need to separate out the costs incurred to support your adult use side as opposed to your medical side, so you can take the appropriate 280E deductions. So if you don't have a plan in place for that, you know, the IRS is probably going to come back and say, no, that it's too murky. We're just going to disallow everything, and you're going to lose all these deductions.
You know, I've often heard that it's not a matter of if it's going to happen; it's a matter of when it's going to happen. Do you think that's the case in the audit world?
I think so. I think you know, on the state side, I think if, you know, when it's going to happen, when 280E goes away and we get descheduled down to at least a Schedule 3 or totally off it altogether, I can see with the investors and the banks, they're going to want full audits anyway, because if you're trying to look for money or whatever you're trying to do, you're going to need money. And you know, everybody, don't raise your hand, but raise your hand. How many people have you seen kick in millions of dollars into a license or licensing on its way, and just the whole thing tanks and they lose all their money because nobody does their due diligence? And so part of the due diligence is, let me see your audited or your some type of financial statement that has some merit to it. So I could definitely see, you know, the audits kicking up one way or the other, especially if you're going for the private financing. The private financing group should be saying, let me see your financials, or at least your pro forma. What is your plan?
Right, absolutely. So, you know, COVID hit us. Did you see any relief given to cannabis business owners for COVID and everything that happened, whether they're an ancillary provider or even the plant touching businesses?
There was talk about the Congress affording COVID relief for cannabis, but I don't, as far as I know, it didn't go through, but I didn't follow it that close because I figured, well, if there's some type of credit or whatever, 280E would disallow that anyway. So unless the IRS came back and said, or the Treasury said, well, this bypasses 280E, I know ancillary, pretty much everybody ancillary, if they applied, they got whatever they were going to get, unless they totally screwed up something. But I didn't see that COVID really affected a ancillary service such as myself to get any type of financial support. Just incidental to that, and I don't know, I think my other colleagues saw this too, there was this huge drop in the amount of tax returns that we were doing because of the extension to July 15th for both business and personal, but there certainly was an uptick in helping cannabis clients get their crap together before they had to file. So, you know, in that sense, they are working to get this done while there's this lull, so they can get their records and stuff up to date and whatnot, which doesn't really address the whole COVID support, but at least, you know, I think they were trying to get it in order just in case there was some type of relief. They get the documentation to show that they needed relief.
Right. And July 15th was that extension for the taxes. Any advice or tips to the procrastinators that haven't done it yet?
So, well, one, don't procrastinate. But two, the July 15th date is the date to actually file the return and pay. So if you didn't pay by either the March 15th or April 15th, depending on what type of form you had to file, you want to get that done. A client of mine had to get recerted by the city of Lansing this week, and MRA asked for the extension forms. I think, well, we didn't need them because it got extended. So, but I had them ready, but I said, here they are, but we never filed them. The other thing is that there's two types of, well, there's a lot of penalties, but there's a penalty for failure to file your return, and then there's a penalty to failure to pay. So even if you don't have the wherewithal to pay because for tax planning, you still want to file that return. Otherwise, you're getting hit with two penalties. And one penalty is painful enough. Don't be, it's like, well, I'll just put it away and I'll deal with it later. At least do the return, figure out where you are, and then plan to pay that. How are you going to plan to pay that liability? Because it's not going to go away.
Absolutely. That's great, great advice. Thank you so much, Harley. Carrie,
Thank you.
now we're going to talk to you. So what are some best practices you can recommend for business owners to implement in their business some strong cannabis accounting functions?
Sure. Well, Aaron and Harley both already mentioned, some things that the cannabis businesses have to do, the 8300 forms. Aaron mentioned the difference between the federal and the state filings, and also the adult use versus the medicinal use. And we also talked about procrastination. There's nothing worse than coming up on the tax deadline and having a year's worth of accounting to do, or not having the documentation. So the biggest thing is to, keep up to date and have all of your, even monthly accounting, quarterly accounting, whichever. We all lose things, documents, paperwork. There is a saying that, if it's not documented, it didn't happen. So, the biggest thing is document. And when you're doing your monthly accounting, have the documentation for each of the expenses, have the information for the allocations that, Aaron had already talked about. So having the invoices, the receipts, the contracts, the employee time cards, pretty much everything, having those documents attached right to the transaction, whether it be in your file cabinet or, or your QuickBooks or, whatever, just having the PDF document attached. And then other best practices include, cash controls, people handling cash, have a separation between those recording the transactions and those handling the bank accounts. Plan for dealing with the large sums of money, hence the 8300 forms, those large amounts. Do regular deposits, and record your transactions, as they happen, so you're not missing something. And having the good documentation and recording the transactions do more than just at tax time as well. It gives you, information to run the business by. It gives the CFO, financials and a picture of where the business is at, instead of making decisions that are, what a gut feeling or something. Have some information and sound documentation as to what is going on in the business. Consistency, checks and balances, all of those, are very important, and, documenting and not procrastinating.
Absolutely. And we often hear about QuickBooks. A lot of, probably a majority of us use it. Are there any other softwares and platforms out there that you would recommend these businesses use?
Well, QuickBooks is by far the most popular, and they're in the accounting profession, there are other software packages that we as accountants use, but for the most part, for the user themselves, QuickBooks is that software. preferably staying away from, you know, the QuickBooks Online. We have heard that QuickBooks, that Intuit is, you know, like some of the bank accounts being shut down by the cannabis, you know, QuickBooks being, bank accounts being shut down. We've seen the same thing with the online version of QuickBooks, that Intuit is shutting down cannabis in businesses. You know, now how true that is, you know, we don't know, but that has been said, and we've seen it in the banking as well. You know, so QuickBooks is by far the most popular.
Any advice that you would give to a company that is starting and they need to set up their bank account?
Set it up early, you know, and the documentation again, you know, having your transactions run through the bank account is a great way to document and have a record of what's happening, you know. But then again, I understand, and we all know that, you know, we're to some extent dealing with cash, you know, so setting up the bank account and using it is a good way to document what you have going on if you can, you know. And you know, pretty much the local and the state banks, you know, are the ones that are able to participate in the cannabis banking.
Right, right. And we do have, we work with several banks here in Michigan that do offer bank accounts for the cannabis industry. You know, do you want to talk a little bit more about the differences of federal and state level? I know we've kind of addressed this in prior conversations. Anything that you would like to add to that as well?
Well, you know, I think it was Aaron that had talked about that, and, you know, back to documenting and prorating, you know, don't wait until the end of the year to have to try to, you know, go back and recreate all of that, you know, keep track of that as you go, you know, because it is, you know, whether it be federal and versus state or adult use and medicinal, you know, all of that needs to be documented, and you don't want to be doing that when it comes time to, you know, file the tax return and you're under the gun trying to do that.
Yeah, absolutely. And how can businesses plan for that tax liability that's owed on their federal and state returns and reduce the impact of that? What's the best tips for that?
I would say to, you know, meet with your tax advisor, your accountant, you know, we all do that, you know, do that quarterly, you know what your impact is going to be. Plan to have the cash to pay the tax, both federal and state. Quarterly estimates, you know, are something that you should consider as well, you know, so that you're not, you know, incurring penalties for not paying the quarterly estimates. But it also helps with the cash flow as well. It'll, you know, you start to pay that in, you know, and then you're paying those quarterly estimates, and, you know, you're reducing the amount that's due with the filing of the tax return.
Right.
It's not, for some people, quarterly estimates are based on their prior year's return. It could be optional, but there is a calculation involved in that, and you should be aware of that to minimize penalty.
And any of the businesses that you work with receive any sort of relief on the COVID-19 issue that happened? Yeah.
I did read that there was a cannabis business that did receive a PPP loan.
Yeah.
But it was said that they shouldn't. Yeah. So.
Right. I read that there was definitely a software company, a seed to sale software company that received one. And I did see in the comments that some people fear that you know, you spend that money, that later on they're going to come back and say something, you know?
Yes.
Well, my last question, and I'm going to ask each of our panelists to answer this as well, but what do you think what can be done by a cannabis business owner right now to help inspire federal change so we do get relief in banking and relief in 280E? Carrie, I was asking you first.
Okay, yep, I had muted myself.
Oh.
So I would say the cannabis business owners, I guess we always hear to, contact your government representatives, you know, be upfront about that, ask for some of the tax laws that have been, proposed, or even the, some of the banking laws, there have been laws throughout the time, that have been proposed.
Absolutely. Thank you, Carrie. And Harley, any suggestions that you have for cannabis business owners and how they can help inspire change?
Yeah, I think that it was Ben Franklin back in the day that said something along the line, either we'll all hang separately or we'll all hang together. And I think for cannabis owners, it's we all need to hang together. And there's safety in numbers, and I think it's just things as like Sensi and Cannabis Connection and all the other little groups we're in, that if we're all doing things as right as possible the same way, we have a much bigger voice rather than people going rogue and saying this or that. So I think that it's follow the groups that you're in and try and get everybody on the same page, and hopefully that'll morph into more groups being on the same page and pushing it forward. And I think, just keep pounding or writing your legislature and whoever in the powers that be until somebody listens. Just keep at it.
Absolutely. And I encourage everybody that's watching with us to look into the National Cannabis Industry Association. In fact, they are hosting an event this coming Wednesday. We will be canceling our usual Wednesday virtual networking event, and we're going to encourage everyone to attend that event. It's going to be a networking opportunity, but the National Cannabis Industry Association does a lot of lobbying work for us on the federal side. And, like Harley said, power in numbers. And then Caleb and Aaron, anything else you want to add? How do you think that what business owners should do to help inspire change on a federal and even state level?
Yeah, sure. Honestly, it's going to sound incredibly conservative, but demonstrate compliance with the rules as they exist today. Going out and taking an incredibly aggressive approach or doing something that isn't gonna hold muster or pass any sniff test. Definitely demonstrate compliance today and show that you're here to do this the right way the first time, and you're not going to try to skirt any rules, get under any tax rugs per se. You're here to do it right and here to further action that I've had with a cannabis member and others in the industry have been, we're here to do it right. We're here to further the industry. We're here to make an impact. So let your actions when it comes to your compliance, your tax filings, everything you do as a business to your core, let those actions reflect what you're trying to do for the industry.
Absolutely. Great. Aaron, anything you'd like to add?
You guys had some great comments. I think, I agree with what everybody said. Certainly compliance, doing things the right way. From Carrie's perspective, obviously, reaching out to, your elected officials and making sure that your voice is being heard. Another thing that we've seen around is, kind of like the West Michigan Cannabis Guild and those other types of associations and groups that are really putting a voice forward for not only for Michigan, but at the national level as well. I think it's really important to kind of maintain and create those coalitions because, the more, the groups and individuals that are part of that, the stronger presence is going to be, heard both in Lansing and in Washington, D.C.
Absolutely. Aaron Larash, Caleb Grapp and Larash, and then Carrie Shell with Growing Green CPA and Business Advisors, and Harley Sherman with It's Him and Harley Sherman CPA. Thank you all so much for your time today. Great expertise. I do ask that after the broadcast that you guys go into the chat and answer any questions that might be directed for you in there. Also encourage you to put your contact information. You can definitely find information on all of these companies on our website, but put your contact information so people can easily get a hold of you. And want to encourage you guys to attend that networking event that I was talking about. I'll start promoting it over the next couple of days that the National Cannabis Industry Association is hosting on Wednesday. I do believe it's at 5 o'clock, 5 to 6:15. And then lastly, our buzz session for next week, we're going to be talking with Andrew Brisboe, the Executive Director of the Michigan Marijuana Regulatory Agency. Excited to have a conversation with him and see how the MRA was dealing through COVID and beyond. Thank you all for being here today and joining us. Join us next week. Have a great Friday. Bye, guys.